Welcome to this explainer. Today, we're diving into what is arguably one of the most audacious, high-stakes, and frankly polarizing cross-border banking plays in recent European history. If you've been keeping an eye on European financial markets, you already know there is absolutely no bigger story right now than Italy's UniCredit making a massive move on Germany's Commerzbank. We are going to look closely at the verified numbers to see if the reward truly outweighs the immense risk.
48%. Just let that staggering number sink in for a second. That represents the voting rights UniCredit has just managed to secure in Commerzbank. It hooks us immediately into a storyline where a foreign bank is breathtakingly close to total control of a major German lender. This isn't just your standard corporate takeover. It's a massive bet on creating a completely new kind of European financial powerhouse.
To make sense of this multi-billion-euro battle, here's our agenda. First, the audacious bid. Second, the war chest. Third, the bull case. Fourth, the bear case. And finally, we'll wrap up with the investor takeaway.
Section 1. The audacious bid. The shockwave.
Right, so CEO Andrea Orcel's aggressive strategy really starts with the hard numbers. And right now, UniCredit is absolutely firing on all cylinders. I mean, they just posted a record-breaking second quarter, pulling in an incredible 3.1 billion euros in net profit alone. When you zoom out, that brings their first-half net profit to a massive 6.3 billion euros, representing an adjusted growth of over 20%. The big takeaway here is that UniCredit is operating from a position of immense financial strength.
Section 2. By the numbers. The war chest.
All that cash is exactly what's filling UniCredit's war chest, giving them the serious ammunition they need right now. Quietly but very aggressively, they've amassed nearly 48% of Commerzbank's voting rights. Now, the path to full integration is still really long, but this effectively positions them with a controlling interest. They are sitting right on the edge of the majority, pretty much changing the whole dynamic of European banking overnight.
And what's wild is how that momentum translates to the future. Driven by a 16% jump in German investment fees, their revenue engine is just roaring. Because of that, UniCredit has dramatically upgraded their profit targets. They are projecting roughly 11.5 billion euros by 2026 before integration costs, over 13 billion by 2028, and they're expected to surpass 15 billion by 2030. Keep in mind, they are forecasting all of this even before any full consolidation of Commerzbank actually happens.
Section 3. The bull case. The reward. So why is Orcel pushing so hard for this? Well, to fund this master plan, which they're internally calling Commerzbank Unlocked, UniCredit actually made a pretty controversial move. They canceled a 4.75 billion euro share buyback, which meant denying shareholders an immediate cash payout. But the underlying math explains why. UniCredit argues that the return on allocated capital for this Commerzbank deal is around 15%, which significantly beats the 11 to 12% yield they would have gotten from just executing the buyback. They are signaling, loud and clear, that true long-term value creation lies in this acquisition.
Now, to hit that 15% return, you need a rock-solid plan. UniCredit expects to unlock 1.4 billion euros in pre-tax synergies before a full merger even takes place. Plus, they're gearing up to invest 2.2 billion to modernize Commerzbank, specifically upgrading its tech and AI capabilities to make it future-ready. And the main target of all this modernization? It's the middle stand, the small and medium-sized enterprises that form the absolute economic backbone of Germany.
Section 4. The bear case. Resistance and reality.
But listen, this is by no means a done deal. In Germany, the pushback has been incredibly fierce. What we have here is a direct, head-to-head clash of corporate visions. On one side, you have UniCredit's aggressive push for a super-regional giant with Commerzbank Unlocked. But on the other side, Commerzbank CEO Andrea Orcel is fiercely defending her standalone growth strategy, which she appropriately named Momentum 2030. She's arguing that Commerzbank is perfectly capable of driving its own growth without being swallowed up by a foreign entity.
To really grasp the friction here, you just have to listen to Commerzbank's management and supervisory board. They haven't minced words at all. They've explicitly urged shareholders to reject UniCredit's share exchange offer, flat out calling it an opportunistic attempt to acquire control. They firmly believe that UniCredit's bid completely fails to reflect the fundamental, intrinsic value of their bank.
And then, of course, there is the massive political elephant in the room, the German government. They still own roughly 12% of Commerzbank, and right now they are firmly opposed to a foreign bank swooping in and taking over a major domestic lender. Now, UniCredit says they've had talks with the government, But navigating the political optics of acquiring a quintessential German institution, that is going to be incredibly tricky.
But even if you look past the politics, Commerzbank is waving some massive red flags about the logistics. They're calling UniCredit's plans vague and warning that up to 11,000 jobs could be threatened. Plus, you've got this incredibly complex IT integration which carries huge execution risks. In fact, just to prevent a devastating cultural clash, UniCredit is planning to run their existing German arm, HVB, alongside Commerzbank for 2 to 3 years. That is a long, highly expensive timeline just to keep things stable.
Section 5. The investor takeaway.
So what does this all mean for the investor? The broader market is basically trying to price in this huge potential upside while simultaneously dealing with all the chaos. If we look at capital strength, UniCredit is being pretty upfront about the costs. They acknowledge a 200 basis point hit from this deal, which is going to drop their CET1 ratio. That's the bank's core safety buffer to roughly 13% by the end of 2026, down from a target of around 15%. But they are reassuring investors that this metric will bounce back quickly once the integration actually starts working.
Right now, the market is super sensitive to how this drama unfolds. We saw shares dip a bit when the news broke about the canceled buyback. Going forward, investors really need to keep a close eye on the timeline for those final regulatory approvals. And in the shorter term, watch to see if CEO Andrea Orcel can force the issue by calling an emergency general meeting of Commerzbank shareholders. That right there could be the real catalyst.
When you weigh UniCredit's incredible financial firepower against the intense political and logistical roadblocks in Germany, it all boils down to this. If Orcel actually navigates this minefield and delivers even a portion of those synergies, the upside is just monumental. But the risks, they are equally sky high. So we have to ask ourselves, are we witnessing the dawn of a massive new European banking superpower? Or is this unprecedented gamble destined to become a multi-billion-euro misstep? Thanks for joining me for this explainer, and we will definitely be keeping a close eye on exactly how this story plays out.